Now, contracts for difference, otherwise known as CFDs, a growing segment of investment markets, especially now that people are gaining confidence on the back of stock market gains. They do, though, carry with them more risk than the usual investments, so you'll want a provider that'll be clear and offer you good support before you get involved. Well, for more, we're joined by Steve Mickenbecker, Head of Research for CANNEX, which has just released its ratings on CFD providers. And Steve, great to have you back with us. It is a new survey in this segment of the market. Who's come out top?
Yeah, well, look, we've got two categories, Carson. One is market maker and one's direct market access. Now, in the direct market access, we've got First Prudential and IG Markets, and in the market maker category, we've got GFT and again IG Markets. Difference is, now I should explain the difference between direct market access and market maker. Direct market access is an arrangement where you are directly going into the physical market for the shares. So you'll place your order and you'll see your order go onto the screen for the underlying BHP stock, for example. Whereas the market maker is a different arrangement where the market maker mirrors the physical share market, but you don't see your actual trade go on, and you take the price that the market maker determines for the stock and for the CFD that underlies it, rather than seeing the actual physical price that you see under the direct market access model.
Which are consumers opting for one over the other? Is there a clear bias towards one?
Yeah, look, I think originally when CFDs first came on board, they didn't have a choice. It was market maker and that's all. Now, increasingly we're seeing people move towards the direct market access model, and a lot of providers are actually reacting to that and saying, look, we'll start to provide that DMA model. Whereas market maker providers are also to some degree reacting to that in saying, look, we will actually do our trades at a guaranteed spread, and in some cases a spread that absolutely reflects the physical market. So it's horses for courses, because on the other side of it, the market maker model can enable trades to be done that can't actually be done direct market access because of market liquidity. They also give you access to indices and foreign exchange and the like.
Got to be said that you've got to go into these markets with your eyes wide open to the attendant risks, and one of those is that it is all down to leverage, right?
Absolutely.
Now, on that basis, what might seem cheap at first blush, i.e. lower costs, lower broking fees, that can all evaporate if it all goes pear-shaped.
Look, CFDs with the leverage provide a fabulous opportunity to, on $5,000 to actually control $50,000 worth of shares.
It's interesting that we're talking about this when it was a dirty word a few months ago. Anyway, carry on.
Yeah, well, wasn't. We'll talk about that in a minute if we can. Yeah. But, I mean, there's a great opportunity to actually leverage your returns and actually make greater returns than you could with the physical market. But the other side of that is that if you pick the direction of the market wrong, then the losses can be just as amplified as the gains. And you can actually lose more than your brokerage account. You might have $5,000 or $10,000, $20,000 in your account, and if you pick it wrong, the downside isn't the $20,000 that you lose if you fully invested that directly in shares. It could be $100,000 or $200,000 at worst. Now, that's a terrible worst case scenario, of course.
Well, indeed, but you do flag in your findings, and you attempt to dispel some of these myths, as you call them, that CFD trading is gambling. It's no different to pokie machines if you don't take it seriously.
Yeah, absolutely. Look, this is gambling if you don't do the right things. I mean, if you're a set and forget investor, forget about CFDs. If you're somebody that isn't educated about the market, don't do CFDs. If you don't have a trading plan, don't do them. And if you're not disciplined, don't do them. You need all of those things before you can go into CFDs. Without any one of those, you are gambling effectively. But if you have all of those in place, then you start to manage your risks. And always keep your eye on the risk and manage the risk.
There are certain hidden fees, right? Just clarify for me, when we talk about it being cheaper often than day trading on an online account, just walk me through that.
Yeah. Well, the brokerage is what you're up for when you buy shares or when you buy CFDs. And CFDs are just that shade cheaper by and large. Now, there's a full range on both. So, you can find cheap direct shares and cheap CFDs. But you've got the brokerage. Now, CFDs in addition bundle a loan in with your CFD. So you're effectively taking a loan and you're buying the $100,000 worth of stock with your $10,000. So you pay an interest rate in addition on the loan. So that's one cost. There can also be costs for the trading platform and the direct market feeds from the ASX.
And the additional buy-sell spread?
Well, yeah, if you're with a market maker who doesn't guarantee the market spread, then you can be up for an additional buy-sell spread. And certainly if you buy the index, you'll be up for a buy-sell spread.
Can you negotiate those? Is there room? Is there wriggle room or not?
Yeah, there is actually. The way most of the pricing is done for CFDs is that there'll be a base price for the very small trader. And that's obviously higher than for a trader who trades more often. Now, there are discounts for frequent traders or for traders who carry $50,000 or $100,000 in their account. Some of the discounts are provided by the CFD provider showing different options. And some of them are basically, look, if you're a very frequent trader, putting a lot through your account, you knock on the door of your broker.
Yeah. Interesting that in compiling this information, the research, you haven't included beginner investors. You say this product should not be recommended to them. At what point do you judge people to move from beginner investing into the professional league, the big time?
Yeah, this isn't a red line you jump over. It's not like, look, I've been trading shares for 3 years, I'm now ready. Some people will be, some won't be. It's knowledge. Knowledge is everything. Go out and get yourself educated. Understand the risks. Now, some people will never be suited to this. I mean, if you can't take a loss, if you really cannot take a loss and sell on a loss, don't buy CFDs. Never do CFDs. You have to use the risk management tools. And the providers give you great risk management tools, so you've got to use them. If you're not prepared to use them, never go into CFDs. You'll never be ready.
Really briefly, finally, Steve, those entities that didn't really make the grade that you surveyed and they were quite a way down the pecking order, what are they not doing that they need to do?
I guess, we talk about 3 different providers here. Now, there are some other very strong offers, and people can go to our website and actually see that there are 5 and 4-star products and then 3 and 2. Cost is a big issue. I mean, there's quite a range of costs. People can be paying as much as about 0.2 compared to 0.08 on brokerage. Now, that's a big difference. The other thing is that on the features, the risk management possibilities, there are all sorts of ranges, and really a good provider really allows people to manage their risk very well. Sets trailing stops, contingent orders. There are a lot of mechanisms that actually will enable traders to cut the risk. Now, good providers give all of those options.
Sure. It's been insightful, and as always, you've got to check the fine print. It's on your website, right? What? www.CANNEX,
CANSTARCANNEX.com.au.
Appreciate your time, Steve Merkenbecker.
Terrific. Thanks, guys.
Right, let's take a very short break. Coming up for you, just who's taking home top honours when it comes to super funds. We've got rankings there for you when we return.